So guys, as I was saying, all right, I met a mentor that showed me how I could actually learn these skill sets and how I can, how it can be beneficial for me. And I was doing cryptocurrency then. I was making some good money there, trading and buying and selling of bitcoins and all that. And I looked at the forex markets, and on a daily basis, then it was in over $5 trillion. And I was like, wow. So if I can actually learn this skill set, that means I can conveniently make even $50 for myself in a day, even $100, I can conveniently make it for myself because the market does about $5 trillion in a day. Guys, that was the mindset I had then, and I said I'm gonna give it all it takes. I'm gonna be consistent. I'm gonna be dedicated. I'm gonna give it all it takes for me to learn this particular skill. But I looked at myself because then I was serving there in Ministry of Works, and I was looking at the entry salary of someone that has a BSc then in Lagos State, and I was like, wow. So for a month, probably I think the entry level maybe around 50K or so. And when you convert that to dollars today, that is about 50,000 is about $120 thereabout. Guys, $120 for working for 30 days. I looked at myself and I said, if I can learn this skill set and I can do just $50 in a day, guys, if I can do $50 in a day, that means in a month, give or take, all right, give or take, I can do anywhere between $700 to $1,000, all right, conveniently. Guys, as of today, $1,000 is about 470,000 naira. Guys, tell me what other business, tell me what other skill set you can have that can give you that. And you are not just, you don't have to do this 24/7. You can have your job, you can have your business, and you can still learn these skill sets and make that, that little. Not to talk of those that do $100 a day, not to talk of those that do $500 a day. Guys, that is why when I say this skill set is something that you must learn. Whether it takes you 6 months, whether it takes you a year, you must learn it, because at the end of the day, you can learn it. You can learn it. You can, decide to, trade whenever you want. It doesn't stop your normal work. It doesn't stop your normal business. Just give it 1 hour, 2 hours a day, and you are good to go. So I learned this particular skill set, and today I'm not just trading for myself. I can also be in front of you like today and teach you how to do this. All right. So that is the little about me. And today I have alongside me Ofola and Fumilola, who will be dishing out this amazing knowledge to you guys. All right. So what do we have for you guys for these 2 days? What do we have for you guys for these 2 days? So allow me to quickly share my screen, and we'll take it off from there. Okay. So I'm going to share my screen with you guys now. Guys, if you can see my screen, just give me a 2 in the chat box. If you can see my screen, give me a 2 in the chat box, guys. If you can see my screen, if you can see my slide, give me a 2 in the chat box. Amazing. So guys, welcome to the Global Trader House training. All right, and today is day 1 of our free boot camp, 2 days boot camp. We do this periodically, so if you miss this, you can actually join our next sessions and all that. And the good thing is that we're going to be posting recordings of each session we do on whatever group you find yourself. All right. So this is a 2 days free training, and basically is an introductory training to the Forex market. All right. So the goal and the aim of what you should expect about this training is that you're going to be having a full understanding of what the Forex market is all about. All right. And you'll be able to use your MetaTrader 4 very well. You should be able to buy and sell. You should be able to know what PIP and lot sizes are and everything. So for the day 1, all right, we're going to be doing introduction to MT4. We're going to be explaining what buying and selling is. We're going to be explaining PIP, lot sizes, all right, how you can enter trades on your MT4. We're going to be talking about stop loss and take profits. Then we're going to be talking about pending orders for day 1. All right. Now for day 2, all right, we're going to be having technical analysis where I'll be talking majorly on support and resistance. We're going to be talking on fundamental analysis. All right. Then I'm going to be explaining risk management to you guys. This is the key to success in Forex trading. All right. Then we're going to be making some key announcements by the Global Trader House team. All right. So today I'm going to be doing a quick introduction into the Forex market before I hand over this training to the next educator who's going to be taking you on some of the key things we have on day 1. All right. So Forex trading. All right. What is Forex? Forex is an abbreviation for foreign exchange. All right. And when you exchange money, when you buy and sell, when you it involves two currencies actually. All right, it involves two currency, and what we are basically doing is we are buying the exchange rate. When the exchange rate is high, we buy. When it is low, we sell. All right. So in every instance, one currency is being bought, and simultaneously another currency is being sold. So what we do physically on the street, the abokis, where you take your naira to get some dollars, or you have some dollars and you want to exchange it to naira. All right. We actually do that. We actually do that on the forex market also. All right, on your phone. Now, what is the forex liquidity? Now, this is why a lot of people trade forex. This is one of the key things that brought me into this market. Why? Because the foreign exchange market is the largest financial market in the world, with about $6.6 trillion in a day. All right. So on a daily basis, the market does about $6.6 trillion in a day, and it runs from Mondays to Friday. When you compare that to the New York Stock Exchange, you can see that it is nowhere compared to what the forex. In fact, there is no market as large as the forex market. That is why you see the banks. All right, that is where they play in. So, what are the advantages of you trading? Why do you need to trade forex market? I've said some little advantages, but little or no commissions. Commissions vary on your brokers. Brokers, I'm going to talk more on brokers as I go on, but you need little or no commissions at all. All right, they don't charge you extra fee to run your account with them. They don't tell you to do pay registration fee or whatever. You just need to set up an account. And the same way you set up an account with a bank, that's the same way you set up an account with a broker. No fixed lot size. Now, lot sizes gives you the ability to make money on the market. Now, that is why you can see some people can make $1,000 depending on their capital. Another person can make just $10. Another person can make $100. No fixed lot size. You can use the lot sizes as you wish, all right? As low as $25 account size to start. So you can start even with just $25 to start trading. In fact, all forex that we use, you can start your trading with just $5. But the thing is, the more the money you have on the table, the more you can make from the market, all right? It's a 24 hours market, 5 days a week. So Mondays to Friday, you are able to trade. Leverage. In forex, you can control large amount of money with small capital, all right? Allows you to keep your risk management tight with nice profit potential. So the idea is, even with just $100, you have the ability to play in a $6.6 trillion market. That is the interesting thing about the foreign exchange market. All right, no matter your capital, you are playing in the same market as the big guns. All right, so the largest financial market in the world with $6.6 trillion daily volume, and you can buy and sell at whatever time you want. So what are the market hierarchies, guys? Who are the major market participants? The first major market participants are the interbank market. That is why you need to understand the forex market is not a scheme. It is not a Ponzi scheme. It is not an investment scheme. Forex market, it is a market where currencies are being sold and bought. Guys, you need to understand, because I see a lot of people when they see probably our training advert, you just see some sort of useless and funny comments. Forex market is not a scheme. Then you must have the knowledge on how to buy and sell yourself. Now, if you give your money out to someone to trade for you, that is another ball game. All right, that's a different. In the bank market, these are guys that actually set the pace for you. They are the major players. We are talking about your normal GT Bank, your Zenith Bank, Face Bank, whatever bank you have. These guys, they play in the forex market. They multiply your money. All the money you have saved in the bank, that is what they use it to do. Their major revenue is generated from the forex market. All right. So we also have the large commercial companies. They also participate in the forex market. Then we have governments and central banks. These guys, they are policy makers. When the governments, they decide what happens to a currency, especially the central bank. So these guys, they are the fundamentals in the market. The central bank will determine exchange rates, policies, and all that. That actually determines the exchange rate of the dollars against the naira or the dollars against the euro. All right. So we also have spot markets, retail traders. Guys, the retail traders, we are considered the retail traders. You just want to leverage on what the big guys are doing. You want to make some profit for yourself. All right. So you need to understand the difference between all these guys. Forex market is not a scheme. It is a market where you can participate. Anybody can trade. So far, you have a phone, you have a mobile phone and internet, and you have a broker account. You can play in the market. You are not investing. You are not investing $100 to get $200 at the end of the month. You make money based on what you trade on the market, and you lose money based on what you trade in the market. All right, so you need to understand these facts. So what are the major sessions? We have London, New York, Sydney, and Tokyo. All right, London is 8 a.m. to 4 p.m. Nigerian time. New York is 2 p.m. to 10 p.m. Nigerian time. Then we have Sydney sessions, 10 p.m. to 4 a.m. Then we have the Tokyo session, which is 2 a.m. to 10 a.m. in the morning, guys. All right, so you need to understand these different sessions. All these different sessions you can buy and sell. The only difference is that the London session has the highest liquidity. That is when money is moving into the market. That is where the biggest banks are trading. Then you have the New York section, which is the second largest session we have in the market, followed by the Asian sessions, the Sydney and Tokyo. All right. So the major currencies in the market, we have the euro, all right, we have the United States dollars, we have the Canadian dollars, we have the Great Britain pounds, we have the Australian dollars, we have the New Zealand dollars, we have the Switzerland franc, then we have the Japanese yen. All right, so these 8 currencies are the major currencies we trade. So not all currencies are available. For instance, you can't trade Naira on your MetaTrader 4. All right, you can't trade Naira on your MetaTrader 4. You can't trade some currencies. All right, although there are some exotic, currencies like the South Africa rand, the Mexico peso, and all that. But these 8 currencies are the major ones that we trade. All right. So brokers in the Forex market, guys, brokers are an integral part in Forex trading. They are the link between you and the Forex market. There's no way you can participate in the Forex market if you don't have a broker's account. So if you're on this call and you've not set up your own Forex account, make sure you go ahead to your group that you are on, get the link and make sure you register your account. Then you must do verification, all right? Because brokers are more or less like banks. Whatever amount you want to use to trade, they are the one that will give you ability to do that. You fund them, you put what it is, $100, you put it in your broker account. So before you can fund your account, guys, before you can fund your account, you must do your verification. All right. I have a short video I did on account verification and all that. You need a national ID card, whether your normal national ID card, voter's card, driver's license, or international passport. Those 4 things are very key. Those are the 4 documents you can use. All right. Voter's card, international passport, driver's license, or national ID card. All right. I love driver's license because if you have a driver's license, you can use it to do both address verification and facial verification. But if you don't have driver's license, then voter's card is the next best thing because these 2 documents, they carry your address. All right. And if you have a voter's card also, you can use it for if it's a full address, because some voter's card, they really put half address on it. If you have your full address on your voter's card, you can use it for verification also for your proof of legal existence and proof of your facial verification, the 2 verifications. But if you have your international passport, you can also use that, but you will need to support it with your bank statement. Your bank statement carries your address. So just go to your bank or print your bank statement online. You just need about a day statement. You need the information page. That first page contains your address. Please note, you don't have to be staying in that address before you can use it. Whether any address you have on your document, it's not a must, you must be staying there. So far it was an address that was put on the verified document on your ID card, you can use it. It's not a must that you are staying in that address now. All right. If you are using national ID card is either the card own or the slip own. If you are using the slip own, you will need to support it with your birth certificate. But if you are using the card own, then that one can fly. You just need to support it with your card certificate. All right. If you have more questions on verification and all that, feel free to send me a message on WhatsApp and I would help you resolve that. All right. So the brokers, they provide you with a server to be able to buy and sell currencies. All right. So they are the one that gives you access to the market, like I said, ability to fund and withdraw from your trading account. So once you have a broker account, you can fund whatever amount you have, you can withdraw. All right. I'm a partner with Forex. Wherever my team members, we all use Forex to trade, guys. And I've been using them for more than 3 years now, and their services is top notch. They have quality customer care. You can fund easily. You can fund with Naira, dollars, Bitcoin, Skrill, whatever what you want to use to fund. And their withdrawal is very fast. All right. If you withdraw before 8 a.m., you get it same day. If you withdraw after 8 a.m., you get it the next day. So the withdrawal is very fast you withdraw with the same method you used to fund. So if you fund them in Naira, if you transfer to their Naira account or their dollar account, when you want to withdraw, you withdraw back your Naira or dollar account. Then they also provide Forex trainings if you want to leverage on that. All right, so how is money made in Forex market? All right, more of this will be explained during the training. All right, so we have three pillars of analysis. We have the technical analysis, we have fundamentals, and we have sentimental. All right, so tomorrow I'm going to be talking more on analysis. All right, how to analyze the market. Then what are the 10 simple trading rules? Trade and demo until you have a profitable strategy. Now, for everybody that has opened their Forex accounts, you can create a free demo account for yourself. All right, you can create a free demo account for. I've done a short video on that. I'm going to post that on the group on how you can create a demo account and link it with your MetaTrader 4. I believe we have all downloaded our MetaTrader 4. Do not trade when you are stressed, emotional, or distracted, guys. Stick to one pair in the beginning and very gradually expand out into a second or third. Otherwise, you become a jack of all pairs and master of none. Don't be that trader. Focus and master. One of the things that can really give you success in the Forex market is being focused, guys. You have to be focused. All right, don't be all over the place. Stick to one or two pairs and master them. Now, you must be patient in the Forex market. Patience is golden in Forex market. Be consistent, guys. One of the things that have brought me success over the years is consistency. Guys, if you are not consistent, there's no way you can win in this market. All right, be consistent. Be prepared to lose some trades. Forex market is not 100%. That is why I told you this is not an investment, a Ponzi scheme where they will tell you bring $10 and get $20 at the end of the month. No, you only make money based on your trades. And always know that Forex market is not 100%. There will be days that you probably lose some trades, but your winning trade is going to be more than your losing. No failure, no progress. All right. Spend 90% of your time studying, 10% executing, and never forget trading is 90% mental, 10% skill. And the last one is you must have a mentor. Who is your mentor? Who is your mentor, guys? Mentors allows fast track to success. So make sure you find yourself a mentor in this industry and you can be a success, guys. So that is the end for my introduction to the Forex market. Right about now, I'm going to be bringing up a friend, a sister, all right? All right, I'm going to be bringing up a friend, a sister, who is going to be taking over this call and giving us a practical class on some of the key topics for day one, all right? So guys, I would appreciate if you are attentive, if you take away all distractions, because we are getting into the major business of the day, all right? Fumilola is a lady I respect so much. We've been doing this together over the years. She has been able to trade hundreds and hundreds of people on how to participate in the Forex market, how to be a winner in the Forex market. And today, she's going to be doing the same for you guys. So I would appreciate if you give her the utmost attention, listen to whatever she has to tell you guys. And definitely, we're going to be making this recording or the recording of the class available to you all. So make sure you sit tight and enjoy the class. Fumi, are you on the call? Fumi, are you on the call?
Can you hear me?
Yes, ma'am, we can hear you.
All right. Good afternoon, guys. Can you throw in some 777 into the chat box to appreciate, to show gratitude to Mr. Awal Adeogun for showing us amazing information, for giving us a lot of nuggets. You know, he's been able to demystify, been able to give us amazing information as regards the introduction to Forex. Like, this is really garnished with a lot of information, guys. Guys, can you just throw in 777? They say gratitude is the key that that opens the door to abundance. Okay, so Mr. Awal, are you there? Please, can you help me with the video?
Okay.
Maybe
sure.
transfer it to me or something. All right, thank you.
Make videos. Yeah,
yeah. All right, so yeah, so I think I woke up pretty late, and I just remember that we have a boot camp, and then I just had to stand up from the bed. And so don't worry about, this is my real face, so aside from you know, when we are all outy and, you know, when we are all on makeup and all. So good morning, everyone. My name is Fumilola Olajide, and I am a Forex trader and a trainer, and I've been doing this for quite a while now, and really, it's been amazing. It's really been amazing, and we feel that it's very important that, you know, the same way we are winning in this space, it's very important that we also help you guys to also win in this space as well. All right. So Mr. Awala has already given amazing information as regards the introduction to Forex, and let me just give you a brief of myself. I'm a microbiologist, and I was actually working in the space of logistics for about 3 years before I quit my job, and I started this fully. And for the past 3 years of doing this, it's been amazing. It's been from glory to glory. And okay, I want to believe everyone can hear me. If you can hear me, drop in some 111 in the chat box. If you can hear me, drop in 111 in the chat box. Okay, I can see Ayomide can hear me. All right, so I'm just going to go straight to the point. So I just want you all, everyone, as long as you've decided, you know, to trade in the foreign exchange space, as long as you have decided to do this, guys, please, what you need to do is stay focused, be consistent. Okay, that is what has actually helped me. You know, for the past 3 years, I've been consistent. I've been consistently doing this. I've been consistently doing this, and you know, the more you put your heart to something, the more you do something repeatedly, the more you get better. All right, so now let us start with what are the things you need to start trading in the foreign exchange market. Okay, number one, you need your broker, as stated by Mr. Awal already. You need the Metal Trader 4. So my training today is going to be based on Metal Trader 4. Now, what is the Metal Trader 4? The Metal Trader 4 is an intermediary between you and the foreign exchange market. Okay, I'm going to come back again. The Metal Trader 4 is an intermediary between you and the foreign exchange market. You cannot trade without the Metal Trader 4. All right, the same way we have the Bureau de change, that you know, the Bureau de change here in the physical, they had the intermediary between you and the bank. You can't just go to the bank and say, oh, I want to buy $100. They won't answer you. But you know, the Bureau de change will go to the bank, they will buy in a lot of, you know, they'll buy in bulk, and they'll come out to sell to you in peace. All right, so the same way we have the broker as an intermediary between you and the foreign exchange market. Why the Metal Trader 4 is the trading platform. Okay, the Metal Trader 4 is the trading platform. You're going to be trading on the Metal Trader 4. Without the Metal Trader 4, you can't have anywhere to trade on. So remember, I told you the broker is an intermediary between you and the foreign exchange market, while the Metal Trader 4 is your trading platform. We have different types of trading platform. We have Metal Trader 5 and so on. But what we are using here is Metal Trader 4. And also, you also need a good network. Okay, for you to trade the foreign exchange market, you need a good network, and this is an online business. So please, we don't want to be hearing stories like, oh, my data will soon finish and all. If you're not always online, this business is not for you. All right. So if you really want to make money from online business, you need to what? You need to invest online, and you need to online. You need a phone and a laptop. Okay, if you don't have a laptop, it's fine, but you need a phone, an Android phone, and of course you need the knowledge, and that is why we are here today. We are here to give you the knowledge that you are going to use to win in the first. So now I'm going to share my screen. All right, please, if you can see my screen, can you drop in some 222 in the chat box? If you can see my screen, can you drop in 222 in the chat box? If you can see my screen, can you drop in 222 in the chat box? Well, some people are complaining that the network is bad, while a lot of people can hear me. So I think it might probably be from your own end, okay? Because if at least about 15, 20 people can hear me, that means it's from your own end, okay? this is what the metal trader 4 looks like, guys. Okay, what you can see on my phone, on my screen right now, is a display of what the metal trader 4 looks like. But before I even go into what the metal trader 4 looks like and how, there's one or two things I would like to talk about. I would like to tell you that this forex business is a very detailed business. It's a business for detailed people, and the same way you see yourself as probably a professional in any field is the same way you need to trade as a professional. All right, so now looking at the metal trader 4, like I said, is a trading platform. And what do we do there? We buy and we sell. What do we do in the foreign exchange space in the first place? What do we do in the foreign exchange space? We buy and we sell foreign currencies. Mr. Wall already told us that the foreign exchange market is the largest financial market in the world. What we do is that we buy and we sell. In everything that we do in the foreign exchange market, the two things that we do is we buy and we sell. Now, what are we buying? What are we selling? We are buying foreign currencies. We are buying foreign currencies. We are buying commodities. We are buying indices. We are buying indices. We are buying commodities, gold, silver. All these things are comprises of what we actually transact in the foreign exchange market. All right, so now the question will come to you that why do I want to buy and why do you want to sell? You must have a reason why you want to buy. You must have a reason why you want to sell. Guys, the reason why I am going to be selling in the foreign exchange market is because I am expecting exchange rate to depreciate. That means exchange rate is high already. So I want it to depreciate. That is why I'm selling. So anytime I identify that exchange rate is high, I am going to be taking a sell. All right, and the reason why we buy in the foreign exchange market is that we are expecting exchange rate to appreciate. That means exchange rate is low at that point. So if exchange rate is low, I'll be looking for buy opportunity, guys. So this brings me to the fact that what we do is that we buy low and we sell high. Can somebody type in the chat box, I buy low, I sell high? I always like when my class is very interactive, when people understand what I am saying. I want to believe everybody are relating with what I am saying at the moment. I buy low, I sell high. Can somebody type it that into the chat box? We buy low, we sell high. Exactly. You buy when exchange rate is low and you sell when exchange rate is high. All right. So I wouldn't just go to the reason why I am going to leave the mainland to go to, let's say, Ireland, Eko Idumota, to buy shoes in bulk is because I know that I'll be able to buy at low price. All right. So the same thing that we do out there in the real life is the same thing you need to understand, you need to do with these foreign currencies, with these indices, with these cryptocurrencies. You want to buy when the exchange rate is low. So for instance, about 2 months ago, dollars was around 350. All right, as at the present, dollar is around 4 something. All right, so assuming you bought when it was low, then by now you will be in a lot of profits. All right, so now that you understand what we do, we buy and we sell, number one. And secondly, we buy low and we sell high. Some people say for the purpose of you remembering, we do say that we buy at the floor and we sell at the roof. At the floor, that means at the ground. When it is low, at the roof, that means it is high. Okay, so now looking at before we go into the likes of the indices, cryptocurrency, we need to start from the foundation, from the smallest before we go higher. All right, we need to start from the likes of currencies. Okay, now let us look at the currencies. All right, in the currency space, there are like 8 major currencies that are traded in the foreign exchange market. All right, I'm going to come back again. There are 8 major currencies that are traded in the foreign exchange market, which I am going to be listing to you. Number one, we have USD, that's the United States dollars. Number 2, we have AUD, that's the Australian dollars. Number 3, we have Euro. All right, we have number 4, we have JPY. These are abbreviations. Okay, JPY is Japanese yen. Number 6, we have NZD, which is New Zealand dollars. Number 6, right, we have CAD, that's CAD, Canadian dollars. Number 7, we have chef, that's CHF. CHF, okay, we have chef, that's Swiss francs. And number 8, we have GBP, that's Great Britain pounds. All right, so those are the 8 major currencies that are traded in the foreign exchange market. If you got what I said, can you type it into the chat box? Can somebody type in the 8 major currencies into the chat box? Can somebody type in the 8 major currencies? And guys, we have a reason why these are major. We don't just call it major for no reason. We have the reason why they are called major currencies. Can somebody type in the 8 major currencies as I listed? I listed USD, AUD. Can somebody type it into the chat box? Amazing. What are the 8 major currencies? What are the 8 major currencies? What are the 8 major currencies? What are they? I listed it for you. What are the 8 major currencies? USD, okay. AUD, Australian dollars, JPY, Japanese yen, NZD, exactly, Bauxite, amazing, GPP, amazing, JPY, card, amazing, CHF, Jaozim, there's not like Joy, it's JPY, Japanese yen, amazing, Euro, amazing. Yeah, so these are the 8 major currencies. Now we have reasons why we call them the 8 major currencies. The reason why we call them the 8 major currencies is because of information, guys. It's because of information. These different countries that hold these currencies, they don't joke with their information. They don't joke with their information, because information is what investors use to, they use this information to take decisions. They use it to take decisions on whether they are buying or selling any foreign currencies. All right. So because these countries, they give accurate information. The United States, they won't say, oh, because Trump is the one in power, so they will not give accurate information based on the unemployment rate. They won't say no. They would always give information, the right information, and at the right time, because this information is what investors use to take decisions on whether they are buying or selling any foreign currency. All right. So because Nigeria would never give you right information, Nigeria can never be there. Even China, they don't give right information. So this is why we call this the 8 major currencies that are widely traded, that investors know that whenever they are getting information based on, oh, there's this currency, what is happening in this economy, blah blah blah, they use it to take adequate decision on whether they are buying or selling, guys. So can somebody type in information? Guys, we are grooming you to be a well-informed trader. Okay, you are not just trading for nothing. You are trading because you know what you are doing, guys. A lot of people out there, they say, oh, I am forex trader, but they don't know what they are doing. They don't know the reason why they are doing it. They don't know the reason why this is happening. All right, amazing. If you're starting to get value from this class, can you start typing in value into the chat box? But actually, your phone hearing value into the chat box. Amazing. All right. So now that you all know that let me close the door. All right, so now that you all know that information is what make us call these the 8 major currencies, now let us go into our metal trader 4. All right, so now you all will notice that the currencies we have on our metal trader 4 are in pairs. All right, we have Euro USD, we have USD JPY, GPP USD, USD chef, Euro GPP, Euro JPY, Euro chef, AUD USD, and so on, guys. All right, for you to trade in the foreign exchange market, okay, the currencies needs to come in pairs. 2 currencies needs to be involved. You can never trade just one currency. You need to trade one currency against another. All right, so for instance, I have Euro USD. All right, so now in the foreign exchange space, anytime 2 currencies are paired together, we call it currency pair. we call it currency pair. And we have what we call those currencies. Now, every currency that you find by your left hand side, okay, I'm going to use my any currency by the left hand side, okay, is called the base currency, while the currency by the right hand side is called the quote currency. The USD on USD Sept is the base currency, JPY quote currency. GPP here is base currency, USD here is quote currency. Now, every currency by your left hand side is called the base currency. The currency by your right hand side is called the quote currency. All right, so in the terms of USD Sept, guys, in terms of USD Sept, which one is the base currency, which one is the quote currency? Can you type it in the chat box? In terms of USD Sept, which one is the base currency, which one is the quote currency? Yes, amazing, Moses. Well done, well done. Let's type into the chat box, guys. Yes, USD is the base currency. So which is the quote currency? USD Sept. Which one is the quote currency now? Which one is the quote currency? Exactly. Sept is the quote currency. Okay, amazing. That's amazing. Yeah, so USD is the base currency, Sept is the quote currency. Now, let us talk about when we tell you to buy and when we tell you to sell any currency pair, what it technically means. Okay, if I tell you that you should buy USD Sept, okay, if I tell you buy USD Sept, guys, what I mean is that you are buying your USD and selling the Sept. All right, so let me come again in this way. Anytime we are telling you buy a particular currency pair, anytime we are telling you buy a particular currency pair, what it means is that you're buying your base currency and you are selling your quote currency. Anytime we are telling you sell a particular currency pair, what we mean is that you are selling your base currency and buying your quote currency. All right, so I'm going to come back again. If we are telling you buy a particular currency pair, it means that you're buying the base currency and you're selling the quote currency. If we tell you that sell a particular currency pair, we mean that you're selling the base currency and buying the quote currency. So now you will see that the base currency is just like the catalyst of the equation. It's the one always doing anytime the base currency is doing this, the quote currency is doing the other. All right, so what else do we have now that you understand that these are in pairs and you understand that the currency by the left hand side is the base currency and the currency by your left hand side is the quote currency. Now let us move to the other side of my screen. On the other side of my screen, okay, we have some numbers there. What are those numbers? Those numbers are called the bid and the ask price. Okay, it's called the bid and the ask price. Okay, it's called the bid and the ask price. Okay, let me circle it. Yeah, this number, okay, it's called the bid and the ask price. The first one is called the bid price, while the second one is called the ask price. Okay, the first one is called the bid price, while the second one is called the ask price. Okay, you know, the foreign exchange market is presently closed right now, so that is why you can't see movement of the exchange rate. Normally those numbers are supposed to be moving. It's supposed to be moving because currency, the exchange rate is never stable. It's always fluctuating. Okay, so normally it's supposed to be fluctuating, but because the foreign exchange market is closed at the moment, you're not seeing the movement of the market. Now the foreign exchange market opens on Sunday night. Market opens on Sunday night and closes on Friday. Open tomorrow night again. Sorry about that, guys. If you can hear me, please drop in some 111 in the chat box. If you can hear me, give me some 111 in the chat box. Okay, great. All right. So I was about explaining the bid and the ask price, right? Did you guys get me when I was talking about the bid and the ask price? I was about explaining what it is. Okay. All right. So I said that the numbers on the right hand side, on the left hand side is the bid price, while the ones on the the right hand side is the ask price. Okay. Let me see if I'm sharing my screen. Okay, I'm about explaining it now. Okay, the bid price is the one on the right hand side. The ask price is the one on the one on the left hand side is the bid price. The one on the right hand side is the ask price. Now, what is the bid price? The bid price is the highest price that your broker is willing to buy a base currency in exchange of the quote currency. I'm going to come back again. The bid price is the highest price that your broker is willing to buy the base currency in exchange of the quote currency. While the ask price is the lowest price that your broker is willing to sell the base currency in exchange of the quote currency. All right, so that is now the difference between the bid and the ask price with your broker. You were all right, so the difference is the spread. The difference is the spread. So that is what the broker charges. You know, anytime you enter a trade, that is why anytime you enter a trade, you would always see it in negative first. Okay, so the spread is what your broker charges out of, you know, every trade that you enter. So it's always negligible. Okay, it's always based on the lot size that you're using. So in the course of the training, you're going to understand what lot size is. All right, so now that you know what this first place means, you already understand the currency pairs, you know the bid and the ask price, you understand what we call the spread, which is the difference between the bid and the ask price. Now let us go into the next on the list. Okay, let us go into the next on the list. Okay, the next thing is the next icon. Okay, let me just go to the next icon on our Metal Trader 4. On our next icon, what we have there is the candlestick. Okay, we have the graphical representation of exchange rates. Okay, remember what we said is that in the foreign exchange market, what we do is we buy and we sell foreign currencies, and what we are dealing with is exchange rate based on the rising and falling of exchange rates. Okay, so now we have what we call the graphical representation of this exchange rate. Okay, it helps us to see you know, a diagram of what is happening in the foreign exchange market. All right, so with that, we have the second icon. I clicked on the second icon to get here. All right, so we have what represents the exchange rate. We call it the candlesticks. The candlesticks is what helps us, you know, represent the exchange rate. So now we have two types of candlesticks. We have what we call the buy candle and the sell candle. Now, each time you see the exchange rate appreciating, there's always a formation of candlestick upward. All right, each time exchange rate is depreciating, there's always formation of exchange rate downward. All right, so you can see that on my chart, I have some candles that are moving upward and I have some candles that are moving downward. Those ones that are moving upward, the green ones, are the buy candle, while the ones that are moving downward, the red ones, are the sell candles. Those are the two types of candles that we have. Then we also have something on top of the candles, okay? What we have on top of the candle that looks like a line is called the wick. It's called the wick. The wick is just like a footprint of the candle, okay? Just like the footprint of the candle. It shows you that price has gotten to a particular level before there was a depreciation in price, okay? So like this particular one here, you can see what this line here. All right, it showed that price once got to this level here. All right, before what it depreciated back here. All right, so these weeks, what we call the weeks, it helps us in terms of technical analysis. Okay, tomorrow Mr. Wal is going to be explaining more as regards this technical analysis, how you can use your graph to do some analysis to help you to know when to buy and when to sell, because it is when you do your analysis, whether fundamental that is when you can know when to buy or when to sell. Candles, we have the buy candle, the bullish candle. What also, like I said, is just like the footprint of the candles. It shows that price has once gotten to this level before there was a depreciation on price or something. Guys, if you understand what I just said now, can you type in clear into the chat box? If you understand what I just said now, can you type in clear into the chat box? If you understand what I just explained as regards the candles, the graphical representation, amazing. Bolaji, Basit, we are going to take questions at the end of the section. All right, so you can, and also the recorded section will also be released as well. So if you didn't get the bid and the ask price, you can still go back to the recorded section. So in order it's going to help you in terms of you getting more understanding. All right, so I have a lot of clear in the chat box. So we are going to move to the next one. All right, the next on our list is what I call my trading view. Okay, like this is where I see my trade. This is where I see my trade. Every trade that I pick, I see it here. All right, so what we have here, we have the balance, we have the equity, we have the free margin, we have the margin level and the margin. All right, and anytime, like I said, anytime you pick a trade, if I want to pick a trade, I come here, I click on new order, and I buy or I sell. Okay, so once I pick the trade will definitely display here. So I have two trades on. I have a running trade and a pending order here. All right, so you're still going to understand what pending orders means. All right, so now what is balance? Balance is the amount of money that you have in your trading account before you pick any trade. All right, before you pick any trade, you have so amount of money in the trading account, so it still remains that amount. Now equity is the amount of money you have after you pick a trade, the amount of money you have left, the amount of money that you have after picking a trade rather. So now you can see I am on a particular trade, which is Euro USD, and I am in profit of $3.43. Okay, I am in profit of $3.43. So because I am in profit, all right, it is added to my balance to give me my equity. All right, so if you want to understand what your equity means, it's just an addition of your running profits or subtraction of your running loss from your balance. Addition of your running profit or subtraction of your running loss from your balance. So presently, I'm in just one trade that is in profit, one running trade that is in profit, and it is harder to my balance to give me my equity. So that is what equity is. All right, so now free margin is the amount of money you have left to enter new trade, the amount of money left that can accommodate more trades that you want to enter. All right, then we also have the margins. Okay, now when we're talking about the margins, guys, it is very important that you know that whenever you are trading, please ensure your margin level does not go below 100%. Ensure your margin level does not go below 100%. If your margin level go below 100%, that means you are in a lot of trades that are in loss, and your broker will start closing your trade from the highest loss to the lowest, and that is how people blow their accounts. All right, so please ensure that you do not find yourself in such situation of having your margin level below 100. And if you end up finding yourself in such a situation, what do? You close the trade from the lowest, from your lowest loss, because if the broker has to close it for you, the broker will close it from the highest loss for you. Okay, all right, so that is very, very, very important. All right, so I've been able to explain the first icon, the second icon, and the third icon. The fourth icon below is the icon where you see your history. Okay, this is where you see the history of your trades, the trades that you've picked. All right, so if you close any trade, here is where you're going to see your history. You can see the history based on daily, you can see it based on weekly, you can see it based on monthly, you can see it last 3 months, and you can also customize the period. All right, the next icon is the news, where you get news on different currency, what is happening and the like. So it's always dropped here. All right, so now that you understand what all these various icons represent, I am going to talk about PEEP. All right, I'm going to go straight to talk about PEEP. Then I'm going to go straight to talk about PEEP. All right, so guys, what is PEEP? What is PEEP? All right, PEEP, usually we say it is point in percentage. That is the meaning of the abbreviation, point in percentage. And also, a PEEP is always the fourth number after your decimal point. The fourth number after your decimal point. All right, the PEEP is always the fourth number after the decimal point. Let me see if I have something on PEEPs. So let me go to my notebook. Okay, great. All right, so you can take a screenshot of this. This can help you. All right, the PEEP, like I said, is point in percentage, and the PEEP is always the fourth number after the decimal point. All right, so before I go there, I would like to explain to you that we have two types of currencies. We have the majors and we have the crosses. Okay, we have, out of the major currencies, we have what we call the major, and we have the ones that we call the crosses. Okay, so now for the major currencies, like I said, the PEEP is the fourth number after the decimal point. While for the JPYs, which are the crosses, the PEEP is the third number after the decimal point. I'm going to come back again. For the major currencies, like I said, the PEEP is always the fourth number after the decimal point. While for the crosses, which are the JPYs, okay, the JPYs, the PEEP is always the third number after the decimal point. So like you can see the EG below, 0.001, all right, the PEEP is 1, okay, the PEEP is 1 there, all right. So for the JPY, you can see 0.0020, the PEEP is 2. So for any pair that you find JPY in it, the PEEP is always the third number after the decimal point. And for any pair that does not have JPY, the PEEP is always the fourth number after the decimal point. I'm going to come back again. Any pair that has JPY, the PEEP is always the third number after the decimal point. Any pair that does not have JPY, the PEEP is always the fourth number after the decimal point. If that is clear, can you type in clear into the chat box? If that is clear, can you type in clear into the chat box? If that is clear, can you type in clear into the chat box? Amazing, amazing, amazing. Let's go, guys. Amazing. So you can take a screenshot of this. You can take a screenshot of this. All right. So now that you understand what the PIP is, all right, because this is actually necessary, because in the course of trainings, you will be saying things like PIP and all. So that will help you. All right, that will help you. This will help you. The foundation is really, really important. Now the next thing I'm going to be taking is lot size. Okay, I'm going to be dropping I'm going to be stopping my home part of this section at lot size. Okay, now what is lot size? What is lot size? Lot size is what helps us measure the amount of money that we are making in the foreign exchange market. I can remember when I just started trading in the foreign exchange market, I was like, okay, how will I know how much I'm making? How will I know how much I'm making in the foreign exchange market? I know my mentor actually told me that the foreign exchange market is the only business that you can do, and you can literally know how much you are going to make from the foreign exchange market before you even pick the trade, or even after you pick the trade. You would know how much you're making. You would know how much you're losing. Okay? So now the lot size is what helps you, determine the value of amount, the amount that you're making in the foreign exchange market. All right? So we have three types of lot size. We have three types of lot size. We have the micro lot size, we have the mini lot size, and we have the standard lot size. We have three types of lot size. We have the mini lot size, we have the standard lot size, and we have the micro lot size. Now, the mini lot size ranges from a 0.01 to a 0.03. The micro lot size rather ranges from a 0.01 to 0.03. The mini lot size ranges from a 0.10 to 0.90. The standard lot size ranges from 1.00 to infinity. Now, what does this mean? All right, anytime you are trading, there's always a place where you have to put your lot size. All right, let me show you. Once I click on new order, there's always a place where you need to put your lot size, which is this place. All right, which is this place. This is where you need to put your lot size here. Okay, now depending on the amount of money that you have in your trading account, you use your lot size. You don't just use the lot size anyhow. Okay, depending on your total equity, how much do you have as a trader, how much are you trading with in your account, that is what determines the lot size that you should use, the right lot size for you to use. All right, so you can see where you input your lot size. That is where you input your lot size. You can edit it. You can edit it. Okay, I want to use 0.01. I've edited it. I want to use 1.00. I've also edited it. Okay, so this is where you input whatever lot size you want to use. This is where you input it. All right, so now I said that we have three types. Okay, and I said 0.01 to 0.09, which is the micro lot size. Now what it means is that if I'm using if I'm using a 0.01 lot size, it means that per pip, per movement of the market, I am going to be making 10 cents. All right, per pip, I am going to be making 10 cents. Each time the exchange rate increase by 1 pip, by 2 pip, by 3 pip, you understand? Per pip, I am going to be making 10 cents. All right, so if the market increased by 2 pips, I'll be making 20 cents. Increase by 3 pips, I'll be making 30 cents. Increase by 4 pips, I'm going to be making 40 cents. All right, so if I am using the 0.09 per pip, I am going to be making 19 cents. All right, then we also have the mini lot size. The mini lot size ranges from 0.10 to 0.90. Per pip of the 0.10, I am going to be making $1. Per pip, I am going to be making $1. So if I am using 0.10 and exchange rate appreciate or depreciate, okay, I am going to be making or losing $1. All right. If I'm using the 0.0.90, I am going to be making $9 per pip. All right. Can somebody tell me how much I am going to be making per pip if I am using 0.20? All right. How much will I be making per pip if I am using 0.20? How much will I be making per? Amazing, 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 amazing. Let's go. Let's go, guys. Let's go, let's go, let's go, let's go. Yes, you're going to be making $2 per pip. Yes, $2 per pip. $2 per pip. Yes, per pip, you're going to be making $2 if you are using a 0.20. Now, the standard lot size is 1.00 till infinity. The standard lot size is 1.00 till infinity. So if I am using the standard lot size of 1.00, I am going to be making $10 per pip. If I'm using 2.00, that's $20 per pip. If I'm using 3.00, that's $30 per pip. If I am using 5.00 lot size, that is $50 per pip. All right. So the lot size is what determines, like I said, in value of how much you are making in the foreign exchange market. And please note, the rule says that you use 0.01 per $100 account. All right, is 0.01 per $100 account. So if you have a $100 account, stick to 0.01. You have a $200 account, you can use 0.02 per trading time. Okay, so please do not over leverage your account. What I tell people is that if you want to, make a lot of money, from the foreign exchange market, why not increase your trading capital? All right, increase your trading capital. That is all you just need to do, so that you can also increase the lot size that you are using. All right, so the lot size is what makes me and you enter the same trade at the same time. But because of the difference in our account size, because you are using, let's say, 0.10, I am using 0.01. When I am saying, oh, I just made $1, you can be saying, oh, I just made $10. Okay. When another person when you are saying that you just made $10, another person can also say that, oh, I just made $100, because we are all using different lot sizes. Guys, if you understand lot size now, I'm so sorry about that. I'm so sorry. I'm here. If you understand the lot size, can you type in lot size into the chat box? If you understand what the lot size is now, can you type in lot size? Can you blast my chat box, guys? Amazing. I can see a lot of people. I can see you guys are really catching up. I can see Messi said catching up really good. Amazing. Moses, I see you. Ololade, I see you. Basit, I see you. Abimbola, I see you. Adeyinka, I see you guys. Jazim, I see you guys. I love you all. This is my own bit of the section today. I've been able to explain to us all. I've been able to take introduction to Metal Trader 4. I've been able to explain to you why you buy and we sell. I told you buy low and you sell high. I've also been able to explain the pips. I said the pips is point in percentage. The pips simply means point in percentage, and it's also the difference in movement of exchange rates. Okay, so if exchange rate appreciates from 30 to 35, so that difference is what? Your pip. All right, and I also told you that we have the pip as the fourth number after the decimal point for the major pairs. Why the crosses, the major crosses, it is the third number after the decimal point, and I also explained about the lot size. All right, so guys, I want you all, I want to all just all to stay focused during the course of this training. The foreign exchange market has a lot of possibilities, of possibilities in it. Okay, you don't want to misuse this opportunity. All right, you don't want to misuse this opportunity. Thank you very much for this for having me on this section. If you got value from this section, if you feel that you've gotten amazing value from this section, can you throw in some emojis into the chat box to show some gratitude to this team that has decided to hold this section? Amazing. Can you throw in some fire emojis into the chat box, guys? Amazing. I can see you all showing the love. At this point, I'm going to be bringing up my friend, my sister, my lover, she really means a lot to me. She really means a lot to me. That there are people that comes into your life, and you're always thankful to God for them. All right, so guys, I would like to bring up my personal person, to also give you a lot of knowledge. Okay, a lot of knowledge. What I want you to do is listen and listen good. Grab your writing papers, everything. Okay, get every information that she has to give you, because she has a lot of knowledge up there that she's ready to pour into you, for us to ensure that you have all are duplicates of us, to help the universe, to help every other person out there. Guys, at this point, I would like you to drop in some 777. They say 7 is the number of perfection, to welcome Koforola, my personal person, to welcome her to take the other side of the section. Koforola, are you there, please? Koforola, are you there?
Hello. Yes, I am. Yeah, hello everyone. Please kindly help me start the video. Thank you very much, sis. I'm super excited to be here. I'm super elated to be here. Thank you very much. Man, that was a lot of value from my sister. God, I was practically writing down. This is 3 years we've been in the business together. Guys, we've been rock and rolling, traveling everywhere together, making money together, living life together. And I tell you, it has really been amazing with this woman. Man, the woman with the heart of gold. 20 times this woman will call me and tell me, Kofo, you need to wake up. When I even see her working, when I see her speak, when I see her act, guys, I have no reason to be tired. When I see her relentless act, when I see her, because this woman, she's always grinding. When I see her grinding, and I tell myself, you need to just wake up and also grind. You need to wake up and also grind. On social media, when I see her post, man, I want to post. When I see her speak, I want to do more, because she's I call her practically call her my ginger. Thank you very much, sis. God bless you for all you do. And most importantly, thank you, my personal coach and mentor, Mr. Awad Adiogu. I am here because of you. You showed me the way. I'm always grateful. Guys, anytime I say my story, I personally am always emotional, because I ask myself, where would I have been if I've not gotten this particular skill set? Where would I have been? Probably I'll be somewhere working with getting paid 30,000 naira or 50K per month. I'm a trained microbiologist. After graduation, my biggest fear was, where do I start from? Because I'm this person that is always anxious. I'm this person that has anxiety. I'm always anxious about everything. I worry a lot. I know about that. So guys, I'm always thinking about my life, like, where would I start from? How would I face people for interview? This has always been running through my mind, and boom, I graduated, and he has been my friend, fine, Mr. Awal. We've been friends right from the university day. And he called me and he said, Kofosi, you need to see this opportunity. Like, you need to see it. You know, at first, all my mind was Forex was for guys. Forex is never for ladies. Forex is something very, very complicated. Forex is all about mathematics. Forex is something that you need to sit down and understand. I said, no, I don't think I'm interested. I said, Kofo, for me to do it, then you can do it. For me to do it, then you can do it. Don't say you are not interested. And here I am today, guys. Here I am today. I call myself rich, not because I have a mansion I'm living. I call myself rich, not because I have my Benz parked outside my house, but I call myself rich just because I have a skill set that can pay me for the rest of my life. I call myself rich because I call myself rich because I can be in the comfort of my home and, guys, make good money for myself. Just last week, Tuesday, I was home, and, guys, just in my sitting room, just in my bedroom, I made about $1,300. $1,300. Guys, convert that to naira and know how much that is. Convert that to naira and know how much that is. So this skill set is really, really amazing, guys. It is really, really amazing. I say this every day. Every day, I can't work for anybody again. Why? Because I've got a skill set that can pay me for the rest of my life. Don't get me wrong. I'm not saying 9 to 5 is bad. I'm not saying you don't have to work for anybody. No, all I'm saying here is you need to have a skill set even while you are working. This doesn't stop you from your daily activities. This doesn't stop you from doing what you've been doing before. This doesn't stop you from going to work, guys. It's all about you getting the right knowledge. It's all about being at the right place at the right time, guys. So if you're super excited to get this knowledge, if you're super elated, you really can't wait to hear from me. You've heard from my brother, you've heard from my sister, guys. You can't wait to hear from me, guys. I'm super excited to be here. You know, I've been doing that. I've been waiting for, God, I'm happy to be here. You are happy to be here, guys. Give me a fire emoji in the chat box. I'm happy to be here with you. I'm happy to share the knowledge with you. I'm happy because this is what I do every day, and anytime I have a chance to do it, I'm always happy. So, guys, you're happy to hear from me. Give me a fire emoji in the chat box. Come on, guys. You are happy to hear from me. Give me a fire emoji in the chat box. You're really happy to get the knowledge. You're happy to be on the call this afternoon. Give me a fire emoji in the chat box. Am I still on? Okay, anybody on? Is anybody in? Is anybody in? Okay, maybe we should just end the call. Maybe we should just end the call. Probably we are not happy to be here. We are not happy to get the knowledge. It is so easy. If we are not happy to get the knowledge, we can just as well end it and come back tomorrow to finish it up. It is so easy. We can just end it up and come back tomorrow to start the call, guys. If you're happy, I am happy. I'm always happy because I'm always happy to share what I know. I'm always happy to dish out what I know. I'm always happy to dish out what I got from my mentor. So if you are not happy, then if you are tired of it, Mr. Jacob, you can just leave. Nobody's begging you to stay. It's all about the energy. If you're tired, you can just leave. If you're tired, Mr. Jacob or Lolade, you can just leave the meeting. Nobody's begging you to stay. This is where you start from. If you don't have the right energy, I'm sorry, you can't trade Forex. If you don't have the right energy, I'm so sorry, you can't trade Forex. So if you're not happy, the ground is free for you to leave. Thank you, guys. Thank you. So I'll be sharing my screen now so that we can go straight to the point. Okay, nice. So I'll be sharing my screen. Okay, nice. So Madam Fumi has done a lot of job. She has done a lot of job talking about the base currency, talking about the quote currency, talking about the low, talking about the high, talking about all the currency we have, and it has really been amazing. And she also spoke about the chart. She explained the two major player we have in the market, and she made mention of she made mention of the buyer and the seller, and she explained the two. She talked about the two candlestick we have. She said the green one is for the buyers, while the red one is for the sellers. The major reason you're buying and selling here is you're buying because you want the exchange rate to go up, and you're selling because you want the exchange rate to come down. Guys, you really need to note that. If you're buying at 360, you're buying at 360 because you want to go 365. If you're selling at 360, you're selling at 360 just because you want it to come to 355. So you always want to note that. But at the moment you're buying at 360, and the exchange rate start coming, and the exchange rate start coming to 359, 358, 350, 356, 357, then you are at loss. That is when you start seeing the red numbers. But when you are buying at 360 and start going up, you start seeing the green numbers. She also explained about the balance, the equity, the margin, the free margin, and also the margin level. And I'm very happy that we all got that. She explained about the history and all. So the way we have two type of way we enter trade, like two type of process we enter trade. So it is the same thing, but the difference is on Android, there's all the codes are different. On Android, the codes are different. Why on iPhone, it is also different. I guess you used an Android phone to explain how to enter trade. So I'll be using my iPhone to explain to you how to pick the trade. So how do you pick trade? How do you pick trade? You already have the knowledge about the 7 major currency we have. You already had ideas about the major currency and the major currency and also the minor currency. So for probably you got an alert to buy Euro USD. You got an alert to buy Euro USD. Based on what Fumi taught us, we got an alert to buy Euro USD. Which of the currency are we buying? Guys, let's relate with each other. That's the best way we can learn together. So if you get an alert to buy Euro USD, which of the currency are we buying? You got an alert to buy Euro USD, which of the currency are we buying? We got an alert to buy Euro USD. Which of the currency pair are we buying? Amazing. We are buying Euro and we are selling USD. Great. We are buying Euro and we are selling USD. This simply means we are buying the quote and we are selling the base. This simply means we are buying quote and we are buying the base, and we are buying the base and we are selling the quote. So guys, you got an alert. The first thing you have to do is, if the market is open, this low and the high start going up. You see the low and the high, it fluctuates. This is not a stagnant market. It is not a stagnant market. It goes, the number changes, the pip changes. That moment the number change, that moment the exchange rate changes is what we call the pip. The movement of the market is what we call the pip. The going up and the coming down of the market is what we call the pip. Just as an example, you can see for Euro USD, the low is 1.1838. The low is 1.1838. The moment it goes 1.1839, that means that's gone 1 pip. The moment it goes 1.1840, it means that's gone 2 pip in profit. So that is how it works. So this exchange rate, the I. I'm talking about the I. So this exchange rate keeps fluctuating and never stagnant. So once you get the alert, buy Euro USD, the first thing you have to take note is the spread. If you can check below my Euro USD, check below the currency pair, you see spread. And the spread at that moment, at the point at which the market closed, was 29. This spread really matters a lot because this is what the broker charge. The spread really matters a lot because this is what the broker charge. This, when you wanted to open a broker account, nobody asked you to pay anything. When you wanted to open the broker account, nobody asked you to pay anything. So so where they get their own profit is from is from the trades you enter. Now I have $100,000, as my balance. If I decide not to touch this money for years, nothing is going to happen to it. But that moment I decide to buy or decide to sell, the broker remove their own charge, which is the spread. So this spread, the way it works now, the spread is 29. The spread is 29. This simply means their own charge is just 3 pips. Their own charge is 3 pips. That's their own charge. So when you enter this particular trade, it goes 3 pips loss at first. So this covers their own charge. 3 pips loss first. Probably you enter for Euro USD. You enter, Fumi already explained what lot size means. So if, for example, we enter with 0.01, and you know per pip of 0.01, you are making $0.1. You know per pip of 0.01, you're making $0.1. So that moment I enter with 0.01, it goes 0.3 loss. That simply means it has covered my 3 pips. It has covered the 3 pips, which is the broker charge. So always take note, the spread is what the broker charge, and this fluctuates a lot. It is never stagnant. You see it's 29 now. By the time the market opens, it can go 50, it can come back to 10. So always note that moment your spread is more than 40 or is more than 30, don't go in for that particular trade. That moment your spread is more than 40 or 30, don't go into that particular trade. Always wait, just chill, probably wait for another session to open before you go into the trade. We have four different type of session. We have 4 different type of session. We have the London session, we have the New York session, we have the Tokyo session, we also have the Asian session. The London session, the New York session, we have the London session, we have the New York session, we have the Tokyo session, and we also have the essential. So these are the sessions we have. So each of the sessions, they open, they break in the 24 hours we have in a day. Each of the sessions break. Like for example, the London session opens once is 7 a.m. 8 a.m. in the morning. It opens once is 8 a.m. in the morning. The London session is open and closes once is 3 p.m. in the afternoon. It's all opens. It closes once it's 4 p.m. in the afternoon. 4 p.m. in the afternoon. It opens 8 a.m. and closes 4 p.m. Why the New York session? The New York session opens 3 p.m. The New York session, once it's 3 p.m., the New York session opens. So the best time to trade is when the New York session and the London sessions are overlapping. That 2 hours that is intermediary is the best time to trade because there's an overlap between the 2 sessions. I'm not going into that today because Mr. Awan will be talking deeply on that tomorrow. So now, how do you enter trade? You got the alert, buy Euro USD. The first thing you have to do is click on Euro USD. Just tap on Euro USD. Once you tap on Euro USD, you have trade, you have charts, you have details. You have trade, you have charts, you have details. On Android phone, you have new order, you have charts, you have details. But on iPhone, this is, like I said, this is iPhone. But if you're using Android, you have new order, you have charts, you have details. So the first thing you have to do is click on it. Click on new order or click on trade. Click on new order or click on trade. So once you click on that, you are in this picture. Once you click on that, you are in this picture. So we have 2 different ways in which we enter the market. We have 2 different ways in which we enter the market. We have the market execution. We also have the pending order. We have the market execution. We also have the pending order. What does this mean? Market execution. This is so simple. Market execution. We have the market execution. We also have the pending order. Market execution, just like the name implies, execution, like execute, market execution. This means immediately. This means immediately. It means I'm buying immediately. If I'm also selling, I'm selling immediately. I'm buying or selling immediately. Probably I want to buy a pack of biscuits. Let's say a pack of biscuits is 360. So when you hear of market execution or instant execution, it might be market execution or instant execution. So once you hear of that, this simply means that you are buying immediately or you are selling immediately at that particular market price. Market price always changes. It's never stagnant. It goes up and comes down. That is what brings the money in the market. That moment the market price is going sideways, is consolidating. It's going sideways, is ranging. In Forex, we call it the consolidating market. It's not making decision. It's not either going up or coming down. So when you hear of market execution, you are either to buy or sell. You can't do both at the same time because the market can either go up or come down. It can either go up or come down. So you can't buy and sell at the same time. So talking about market execution, probably you want to buy a pack of biscuits for 360. You want to buy a pack of biscuits for 360. It means, okay, you priced a pack of biscuits and they said the pack of biscuits is 360. So when you are talking about market execution, it means you are buying at that 360. You are not pricing. It's not going up or coming down. You are buying at that 360. So when you hear of sell, buy by market or sell by market, this is called market execution. So when you hear buy by market, don't wait for any price. It means buy immediately. So the second one is called the pending order. The second one is called the pending order, just like the name implies, pending. Pending. You price the bag of biscuits for 360, and no, you are not satisfied with that 360. You definitely know this is still going to come down to 350. So you told the seller of the biscuit that, okay, take this 350 naira. I'm pending my order till the price gets to 350. I'm not buying at your 360. I have my own particular exchange rate I want to buy. This simply means you are telling the broker that you are not interested in their own price. You have your own personal exchange rate that you want to buy or you want to sell. So this simply means that 360, you are pending your order till it gets to your own particular price. And once it gets to your particular price, immediately it takes you in for either a buy or a sell. Like you can see on the screen, we have 4 different types of pending order. We have the buy limit, we have the sell limit, we have the buy stop, we also have the sell stop. We have the buy limit, we have the sell limit, we have the buy stop, we also have the sell stop. These are the 4 pending orders we have. 4 different pending order we have. So this simply means it has all the pending orders have its own meaning. You're talking about limits. You're saying, okay, I'm buying at 360. I'm buying at 360. Once it gets to 360, probably that particular market price is still at 350. It's still at 350. So you are setting your own price at 360. That once it gets, the market is coming up. So once it gets to that 360, let it take me in for a buy. Why the stop means you want to buy, but the market is selling at the moment. And you know that once it sells to 360, it will start buying. So you put your own entry point at 360. So in the short term, the pending order means that you have your own entry price, you have your own market price that you want to buy. So the market execution means you're buying immediately. While the pending order means you're pending your order till it gets to a particular price before you buy or sell. Guys, if you understand what market execution means and pending order, give me cleared in the chat box. You understand what market execution and pending order means, give me cleared in the chat box. You understand what pending order and market execution means, give me cleared in the chat box. You understand what pending order means and market execution? Give me cleared in the chat box. Great. Great. I'm happy we are getting it. So it is really simple. So now, as a newbie, you are not expected to go into the market yourself and start trading. As a newbie, everything takes process. Like my mentor would always say, for you to be a profitable Forex trader, you need to go through the right process. You need to practice often. You need to be patient. Then profit will definitely come in. So this is just the 3 P's. Process, patience, and practice. Guys, and profit will definitely fall in. So the right process is, as a newbie, just come, observe, learn, understand. Understand, sorry about that. Understand, and gradually you pick up. That's why we have the demo account. The demo account is not your real money. So no emotion is attached. So you always want to treat your demo account like your real money. Because when you do that, you see that with time, by the time you start trading on your real money, you don't have any problem with it. But because but at that moment when you think you can treat your demo account anyhow because it's not your real money, you don't do that. So guys, I'm happy we are all cleared with the 2 types of order: the market instant execution and also the pending order. The next one, you can see some numbers with minus 0.1, minus 0.01, minus 0.03, plus. So these are called the lot sizes. Fumi has done a very great work explaining what lot size means. So we have 3 different, I'll just go through it and just pass. We have 3 different types of lot size: the 0.01, 0.1, and also the 1 lot. The micro, the mini, and the standard. The micro lot size is 0.01, the mini is 0.1, while the standard is 1 lot. Per pip of the 0.01, you are making $0.1. That is 10 cents. That is 10 cents. Per pip of the 0.1, you are making $1, and per pip of the standard, you are making $10. So guys, it is easy. So this is what determines your loss and your profit in the market. And this is what I tell people, because risk management is really, really important. I was discussing with my brother this afternoon, just like a few minutes before I joined the call. I was telling him that why most people get tired and quit Forex is because they are not disciplined. And when we talk about discipline in Forex, this is not home training. This is your psychological discipline. How greedy you are. How much you can accept loss. Because Forex is, if you can't accept losses in Forex, then you really can't go a long way. If you're somebody that because you lose, you must win back immediately, you really can't go a long way. You can't go fast. So discipline in here is really, really important. So I tell people, do not risk more than 3% of your account per trade. Do not even 1 to 3%. 1 to 3% of all your accounts per trade. You always want to take note of that. So this is what I advise people. If you 0.01 per $100 in your account, 0.01 per $100 in your account, guys, you need to understand that 0.01 per $100 in your account. So if you have $200, what is the ideal lot size to use? I just said 0.01 per $100 in your account. Okay, patient, I'll just try and take it again. 0.01 per $100 in your account. So if you have if you have $200, what is the ideal lot size to use? Great, 0.02. If you have $300, what is the ideal lot size to use? If you have 300, what is the ideal lot size to use? Come on, guys, let's be interactive. If you're interacting, you get to understand it better. Great. If you have 500 capital, what is the ideal lot to use? You have $500 in your account. Great. If you have 1,000, what is the ideal lot size to use? $1,000 in your account size. In your account. 0 point. Somebody said 1. Hey, whoa, no. Don't use 1. When you are risking 1, it means you are risking 10% of your account. When you are using 1 lot, it means you are risking 10% of your account, and you don't want to do that. The ideal lot size to use is 0.1. But that moment you have $10,000 in your account size, that is when you are to use 1 lot. Guys, 1 standard lot for $10,000. Great. So we all understand our lot size. So you always want to refresh yourself about the lot size and also the risk management. It is really, really important. So after this, remember, I said the first step when you get the alert that buy Euro USD, click on Euro USD, click on new order or trade. You can also click on chart. That moment you are clicking on chart, probably you want to check, or that moment you are clicking on chart, probably you want to check the current market price. You see this red line and this blue line. I hope everybody can see it. This red line and this blue line. The space between it is the spread I was talking about. The space between it is the spread I was talking about. The spread is the difference between your bid and your ask. That is your spread. The difference between your bid and your ask is what we call the spread. So probably you want to check the charts and see what candlestick is forming. You want to see what's happening in the market. You want to see the trend. You want to see the support. You want to check the resistance. You can also click on that. But that moment you want to execute, you click on trade or you click on new order. After that, the next thing you want to do is check your lot size. You can change it by just clicking on it. Click on the one in the middle. Click on the one in the middle and put in whatever you want to put in. Guys, always remember to check. Probably you switch from your demo to your live. Check. Or probably you were in demo, because I've had a lot of mentees that came in. Probably they were on their demo and they used 1 lot. I even have one about last 2 weeks. He was on his demo. He was using 1 lot size on his demo. Then when he came on his, that's why I said treat your demo just the way you treat your live account. Then immediately he switched to his live account. He forgot to change his lot size, and he only had $100 in his account. He only had $100 in his account. So he just used 1 lot sham. And unfortunately for him, it was NZD, and the spread was very much at that moment. And about 50% of his money left his account, like it just went in loss automatically. So guys, you always want to take note of that. Always check your lot size. It is important. So once you do that, that moment you do that, immediately you check your lot size and you see it's good. The next thing you have to do is click on sell or click on buy. Click on sell or click on buy. At the moment the market is closed, I wish the market wasn't closed, would have done more and more. So click on buy or click on sell. So the next one is the pending order. The pending order, when you get alert on the pending order, it can be either of the 4. It can be buy limits, it can be sell limits, it can be buy stop, it can be sell stop. And by the time you get the alert, it will be buy limits at so price. Buy limits at so price. So when you get buy limit at so what you have to do is copy that price you are getting and input it here. Copy the price you are getting and input it at price. So if you are entering for any pending order, then you must add a price that you want to go in with. So once you input the price, you can then place. And automatically, when the market gets that particular price, it takes you in immediately. It takes you in immediately. When it gets that particular price, it takes you in immediately. Same thing as sell stop or buy stop. Same thing as buy stop or sell stop. You put in the price you want, you place it. When it gets to that price, automatically it takes you in for either a buy or a sell. Guys, that is just it. It is so simple, but you might not get it if you don't practice often. You might not get it if you don't practice often. You need to practice it. When the market opens, market will open 10 p.m. tomorrow. Practice. Then when you practice and you don't understand anything, you can easily talk to the admin and relate to you, we explain to you, and you're good to go. So guys, the next thing I will be explaining, which is the last thing, is how to calculate our stop loss and take profit. How to calculate our stop loss and take profit, guys. I'll be giving out the formula. I don't have a practical example of it, or let me just try and get a picture so I can share with everyone. Just give me a sec so that everyone can get. Just give me a second. I'll be with you shortly. Just give me a second. Okay, let's just move on. While I'm waiting for the picture to download, let me just share my screen back. So how do we calculate stop loss and take profit? How do we calculate stop loss and take profit? The first thing that is important, while we are waiting for the picture, please let's just write down the formula so that by the time the picture comes, it becomes very easy for us to grab it. So the first thing that is important is the point of entry. The price of entry is the most important thing. The price of entry, the price that you entered. We have two different prices. We have two different prices. I'll be showing us shortly. The first price is called the entry price, while the second price is called the current price. The first price is called it was just an example, Mr. Moses. It was just an example. I didn't get it anywhere. I just cited an example, so I didn't get the price anywhere. The market is closed at the moment, so there's no how we want to analyze the market to get price. So I just dropped it. Okay. Okay, so I hope everyone can see my screen now. Can you see my screen, please? If you can see my screen, please indicate in the chat box. If you can see my screen, please indicate in the chat box. If you can see my screen, please indicate in the chat box. Okay, amazing. Okay, so you can see what we have here. You can see the balance, you can see the equity. So this is a true example of the balance and equity. You can see the money I came into the market is $3,757. And now I'm in profit of $307. I'm in profit of $307. which makes my balance still the same thing because I'm still presently in the trade, but my equity becomes 4,001. So that moment I decide to close out this trade, that moment I decide to close out from this particular trade, then my balance and my equity becomes the same. My balance and my equity becomes the same. So this is Euro USD. You can see buy. And my lot size is 0.05. So when you enter a trade, immediately you click on buy or sell. This is what it looks like on your trading view. On your trade view, sorry. So now I was citing an example the other time that we have two different prices. I said we have what is called the entry price, and we also have what is called the current price. So you can see by the first price, if you check under Euro USD, directly under Euro USD, we have a price 1.13078. That is called the entry price. That was the particular point I clicked on buy, and it never changes. It's just like I bought my iPhone I bought my iPhone phone at 33,000. I bought it at 33,000. I already got it. I already bought it. It's out of the market. Then if the price decides to go up, it's my own profit. If it decides to come down, it's my own loss. But that price I got it can never change. So the entry price never fluctuates. In as much as the market price is going up and coming down, the entry price never ever changes. While we have the second price, it's called the current market price. That is the current market price. The current market price is what determines your own profit and your own loss. Like now, I'm buying. I bought at 1.13078, and now the current market is at 1.13067. Remember, I'm buying because I want my entry price, my exchange price to go up, and now it's coming down, and that is why I'm in loss. At the beginning, the current price is around 1.13080. I'll be in 2 pip profit. If you go what the scenario I just explained, guys, give me a yes in the chat box. You got what I just explained perfectly, give me a yes in the chat box. You got what I just explained perfectly, give me a yes in the chat box. Why we are in loss and why we are in profit. Okay, I have the no, Mr. Wisdom. Let me just quickly rush through it back. I said we have 2 different prices. We have the current price, we have the entry price, which is the point you entered the market, the point you bought euro. It can never change. And now we have the exchange rate, the current price, which is going up and coming down. That is the current price. It can either be consolidating, be going sideways, or be going up, or be coming down. Another point, we bought at 1.13078, and the major reason we are buying is because we want our exchange rate to go up. We want the current market price to keep going up, but now it is coming down. That's why we are in loss. Now, talking about USD/JPY at the other hand, we sold USD/JPY. Remember, the pip of JPY pairs is always different from other pairs. This is a typical example of that. So now we are selling USD/JPY at 111.928, and now we are at 108. Remember, we are selling because we want our exchange rate to come down. And look at it, this is coming down nicely from 111 to 108, and that is why we are in profit. Adibin is at 118, we'll be in massive loss. But look at it now. Guys, if you understand this perfectly, before we go into stop loss and take profit. Mr. Bassi, then you need to watch the recorded session. You can't just be joining and you expect to get it. We've gone a long way. So guys, if you understand what I just explained about the buy and sell, the profit and the losses, please give me a yes in the chat box so that we can move. Guys, give me a yes so we can move. We're about ending the meeting. But we need to understand this perfectly before we can do any other thing. Okay, great. Great, great. So back to what I was saying. So this is how it looks like. These guys. Okay. Oh, hi, Tony Brown. How are you? That's one of my best mentee. You're welcome, Tony Brown. Okay, so okay. So this is another perfect thing that can help. I tried to source images so that we can get it perfectly. So this is it. This is it, guys. So we have I just explained the entry price and the current price. So now let's now understand stop loss and take profit. How do we calculate stop loss and take profit? So guys, let's do this together. We are doing this together. So I'll be asking you a lot of questions because it's something we've done. So let's just make it practical so that we can get it. So now, take profit for Euro USD. Take profit. So how do we calculate take profit for Euro USD? It is so simple. Take profit. This simply means take profit. If this thing is in profit, please kindly take me out automatically. If it has gotten to this particular price in profit, kindly take me out in profit. And I'm in for a buy for Euro USD. I'm in for a buy. So automatically, if it's going to be in profit, it will be adding up. And once it gets to that particular price I'm setting, it takes me out automatically. So now the first thing you need to understand is, by the time you want, let's take for example, good. Let's take for example, I'm a retail trader. I'm a retail trader. Then I got a pack of biscuits for 360 from the wholesale shop. I got a pack of biscuits for 360 from the wholesale shop. The first thing I'll do is I'll take that 360 and join my own profit, which is 10 naira. I will join my own profit, which is 10 naira. I bought the pack of biscuits for 360 from the wholesale shop. I can't obviously sell it to the consumer at 360. I need to add my own profit. So then I'll now add my own profit, which is 10 naira. That when that consumer comes and wants to buy it at 370, please take me out in profit automatically. Guys, so to you, I'll be giving you the take profit formula, then you give me the stop loss formula for a buy. I'll give you the take profit formula for a buy, then you give me the stop loss formula. So now the take profit formula will be your entry price, that point at which you entered. That 360 I bought the carton of biscuits was my entry price. That 360 was my entry price, plus that point, the amount of profit I want to make. But in Forex, it is called amount of pip in Forex. Your entry price, which is the point at which you bought, plus, remember, you are buying, and you are buying because you want your exchange rate to go up, plus the amount of pip you are willing to make. Before you go into a particular trade, you need to have, probably you want to make 2 pip, you want to make 3 pip, you want to make 10 pip or 50 pips. You need to have that in mind. So, formula for take profit for a buy. Formula for take profit for a buy. Let me type it in. Formula take profit for a buy. Take profit for a buy will be equals to your entry price plus, guys, the number of pips you are willing to make. Number of pips you are willing to make. Guys, this is so simple. This is so simple. Take profit for a buy equals your entry price. I told you, your entry price is always the first one that never changes. So you already have your entry price. Then your own decision is to decide how many pips I'm willing to go for, and you add it up with it. It is so simple. Why stop loss, on the other hand, says when it gets to a particular, it's like you're putting a barricade to your money, to your trade. That once you get to this particular price in loss, please take me out. In loss, I don't want to risk more than this. This is the only trade, this is the only business that you know how much you're willing to make and how much you're willing to risk. I don't want to risk more than $20. I don't want to risk more than $3. Once you get there in loss, take me out. Take me out in loss. So guys, what will be the formula? And you know, when it's coming in loss, then it is decreasing. When it's in loss, it is decreasing. So that, guys, what will be the formula? The first person to get this will be getting a recharge card from me. The first person to get this will be getting a recharge card from me. Tony Brown, you're not allowed. The first person to get this formula will be getting a recharge card from me. The first person to get this formula will be getting a recharge card from me. I just explained. Stop loss is just the vice versa of the take profit. Stop loss is just the vice versa of take profit. So guys, let's keep it rolling in. Great. Your entry price minus the number of pips you're willing to risk or lose. So the first person to get it, the first one to answer the question was Peter. But Mr. Peter wrote entry price minus number of pip. Number of pip what? Number of pip what? It wasn't complete. The second person to get this right was Ololade Jacob. Entry price minus pip willing to risk. Mr. Ololade was the first person to get the answer. Thank you very much, Mr. Ololade. So the simple answer is, please just message me after the class so I can give you the recharge card, or just send me in your number. You can just send your number or something. Just message me on WhatsApp. So your entry price minus the number of pips you're willing to lose. When you are talking about stop loss, it is lose. You are losing. No, it's a gift. It's a gift, Mr. Jacob. It's a gift. So we are all learning together. So number of pips you're willing to lose. So it's when you're talking about take profit, then you're making. But when you're talking about stop loss, you're losing. You're not making at this point. So you need to understand that, okay, when I'm stopping my loss, then it is coming down. It's coming down gradually to be your entry price minus, if that my pack of biscuits was 360. That number of, yes, you are risking the pip. When you're making, then you're saying what you are saying is, okay, this is the amount of pips I'm willing to make. I'm willing to make. But when you are setting your stop loss and you are willing to risk this, when it goes wrong, this is the amount of pips I'm willing to risk out of my money. You know, when you want to enter a particular trade, you are not, when you have $100, you are not entering with all $100. The only thing that differentiates you is the lot size. The only thing that tells the broker that, okay, this person is just willing to risk 1% is your lot size. This person is willing to risk 5% is your lot size. So when you put in the right lot size, then you are good. But that means you have $100 and you're using 0.1, then you're risking too much. So we need to understand that. Yes, sir. Yes, ma'am. Stop loss for buy. So now let's talk about stop loss for sell. Stop loss for sell. Remember this, guys. We are selling because we want our exchange rate to come down. We are selling because we want our exchange rate to come down. Guys, we already discussed about buy and we all understood it. Guys, before we move to sell, if you understand stop loss and take profit for buy, before we go into practical session and round up, give me a yes in the chat box. Give me cleared in the chat box. You understand stop loss and take profit for buy, the formula. Give me cleared in the chat box. Give me cleared in the chat box. If you're not clear, you can give me a no. But I don't expect anybody to type no because it was very clear. Made it very clear. Please, if you are joining, please don't type no. If you're just joining, don't type no, because there's no way you understand. Not too clear. Okay, Mr. Wisdom, you can just probably by the time you do sell and the practical session, it will be clear. Just make sure that you write down the formula. It is very important. Make sure you write down the formula. So by the time you want to practicalize it, it will get clear. Okay, thank you very much, guys. I'm happy we are getting value. So talking about the sell, the sell, let me give you a video. The sell is just the vice versa of buy, because when you're buying, it's going up. When you're selling, it's coming down. So guys, what will be the take profit for sale? The first person to get this, get a recharge card from me. The first person to get this, get a recharge card from me. What will be the take profit for sale? What will be the take profit for sale? Remember, we are selling. I made mention of my entry price is the most important thing in the game. And we're selling because we want our exchange rate to come down. When it's coming down, we are in profit. That moment it's coming down, we are in profit. So what will be our formula for sale? When it's coming down, we are in profit. I said when we are buying, when it's going up, we are in profit. But now, what will be our take profit for sale? Mr. Peter, you are repeating the same mistake you made earlier again. Guys, let's interact. Yeah, we have Nina already, but let's drop it in. So we'll be very, very sure that we are all getting it. If you make a mistake, trust me, I'm going to correct you. Nobody's criticizing. We are all learning. Amazing. Somebody said plus. Mr. Moses, remember, we are selling because we want our exchange rate to come down. We are selling. This is, we are selling. We're not buying. We are selling. We're not buying. Mr. Abraham, please, you need to recap this what you type. We are selling. We're not buying. When we are buying, this is going up. When we are selling, this is coming down. Amazing. So the take profit simply means simply equals to your entry price minus the number of pips you're willing to make. UV, you actually got it right. You're the first person to get it. Mr. Peter, I said you should always include number of pips you are what pip. So it's very, very important. So UV can message me after the class so that we can get it done. So guys, you need to understand we are selling because we want our exchange rate to come down. So it is your entry minus the number of pips you're willing to make. The number of pips you want to make. Is it 10 pips? Is it 20 pips? Is it 30 pips? Is it 50? Is it 70? So guys, it is so simple. Remember, take profit for buy is your entry price plus number of pips you are willing to make. Take profit for sell is your entry price minus number of pips you're willing to make. So guys, what will be the stop loss for sell? What will be the stop loss for sell? Please, if you are following the class, please ensure you are writing those formula down. Ensure that you are writing those formula down. So what will be the stop loss? The stop loss simply means when the exchange rate you're buying at, you're selling at 360, the moment start going 361, 362, then you are at loss. You are at loss. So guys, what will be the, yes, Mr. Peter got it this time. No, you didn't. You are not making. Remember, this is stop loss. Remember, this is stop loss, Mr. Peter. Remember, this is stop loss. Stop loss. When you're calculating for stop loss, then you are losing, not making. Come on, guys, let's type it in. Let's type it in. We understand this thing. What will be the formula for stop loss for take profit? What will be the formula for stop loss for take profit? It is so simple. It equals to your entry price plus the number of pips you're willing to lose. Your entry price minus the number of, plus the number of pips you are willing to lose. Amazing, amazing. Great. We all got that right. So now let's go to the practical version of it. Let's practicalize it. Now, let's calculate for Euro USD. Let's calculate the take profit and stop loss for Euro USD. What is the entry price for Euro USD? Please enter it into the chat box. What is the entry price for Euro USD? What is the entry price for Euro USD? What is the entry price for Euro USD? I'm not going to say that again because I already said it earlier. What is the entry price for Euro USD? You have it on my screen. You have it on my screen. Euro USD is the first currency pair. What is the formula what is the entry price for Euro USD? Come on, guys, type it in, type it in. Okay, great. 1.1378. 1.1378. 1.13078. Guys, note, 8 is your pipette. 8 is your pipette. The last number, the 5th number is your pipette. You don't need that in your calculation. So when you are calculating, remove that 8. You don't need that 8 from in your calculation. The 8 is your pipette, which you don't need. The 5th number after the decimal point is your pipette, which you don't need it. You don't need it when it comes to your calculation. So remove it from your calculation. So now, can somebody calculate the take profit for, we already have the entry price. Can somebody calculate the take profit for buy for me, for Euro USD? What would the take profit be? This is the entry price. Remember, the formula for take profit is your entry plus, let's say we are willing to risk 30 pips. If we are willing to make 30 pips, we are willing to make 30 pips. We are willing to make 30 pips. Then what will be the answer? We are willing to make 30 pips, then what will be the answer? Remember, the 8 is not part of the game. The 8 is not part of the game. We are willing to make 30 pips, then what will be the answer? We are willing to make 30 pips, then what will be the answer? We are willing to make 30 pips. Remember, the formula is your entry price plus the number of pips you're willing to make. Guys, what will be the answer? What will be the answer, guys? Mr. UV, let's check again. Let's check again, Mr. UV, let's check again. UV and Madam Ngozi, please, let's check the answer again. Okay. Guys, that will be your entry price. Your entry price is 1.1307 plus 30. Plus 30, guys. Please, let's check the answer again. Let's check the answer again. Remember, let's remember our mathematics. Let's remember our mathematics. The 30 will be under 07. The 30 will be under 07. The 30 will be under 0. We are adding from the back, not from the front. We are adding from the back, not from the front. So let's say the people are willing to make is 30. Guys, what will be the answer? I'm seeing a lot of funny answer here. We are adding from the back, not from the front. We are adding from the back and not from the front. And the amount we are willing to make is 30 pips. Thank you, Madam Uvier. Thank you, Madam Ngozi. Mr. Peter, please check the answer again. Thank you, Bash. Guys, let's check the answer again. Thank you, Mabel. Thank you, God and. Thank you, Mr. Benjamin. Guys, let's check the answer again. We are adding from the back. We are adding from the back, not from the front. We are adding from the back, not from the front. We are adding from the back, not from the front. And the entry price is 1.1307. That is the entry price. 1.1307. So when your 30 is under 07, 30 plus 7 plus 0 is 7. 0 plus 3 is 3. 3, 1.1. So the answer is 1.1337. 1.1337. It is so simple. We are adding 30 plus 07. That will make it 37. Guys, so our take profit will be 1.1337. That's our take profit. So now, let's say we are willing to risk 20 pips. What will our answer be? Let's say what would the stop loss be? I'm willing to risk 20 pips. What will my stop loss be? I'm willing to risk 20 pips. I want everybody to get this answer right. Remember, the formula for stop loss is entry price minus the number of pips you are willing to lose, to risk. 20 and we are willing to risk 20 pips. We are willing to risk 20 pips. We are willing to risk 20 pips. That's entry price minus the number of pips you are willing to risk. That is 20. Guys, we are willing to risk 20 pips, bash. We are willing to risk 20 pips, bash. We are willing to risk 20 pips. Guys, let's check this again. Our entry price is 1.1307. 1.1307 minus 20 because we are willing to risk 20 pips. We are willing to risk 20 pips. So the 20 will directly be under 07. The 20 will be under directly on. Thank you, Madam Ngozi. Thank you, Madam Mabel. Yes, amazing. Amazing. So the answer will be 1.1287. 1.12. Thank you, Mr. Peter. Great. That will be 1.1287. Fine. So we've gotten our answer. We've gotten answer for the take profits and the stop loss. The top step. So what we have to do next is to go directly to our chart. Go back to our trade. Add click. That moment you add click, I'm sorry, there's no trade. I'm just using a picture. Add click on that particular trade you calculated for. Once you add click on it, you see modify, close. Close means you are willing to close out in profit or in loss. But when it comes to modify, it means you want to input those values you calculated. So click on modify. Once you click on modify, you have stuff like this. Always note, that moment you enter with a particular lot size, you can't change that lot size again. You can't change the lot size again. But you can always modify your stop loss and take profit as many times as you want. This is a visual for Android phone, but for iPhone, you will have your take profit and stop loss written, just like mine. Just like mine is written. You can see, take profit, stop loss. Take profit, stop loss. If you are using iPhone, you have it written, but if you are using Android, you have it in lines. The red line is where you put in your stop loss. Why the green one, the lemon one, you can see where you have 0.000. The red one is where you input your calculated stop loss. Why the green one is where you input your calculated take profit. After your calculation, all you need to do is put it in and modify. Put it in and modify. If you are also using Android, iPhone, put your stop loss in, put your take profit in, and click here on modify. That moment your modify is not highlighted in red. That moment your modify is not highlighted in red. This simply means your calculation is not correct. This simply means your calculation is not correct. Okay, thank you, Mr. Felix Abia. Thank you, sir. So if your modify is not highlighted, this means your calculation is not correct. There's no cause for alarm. Just review it, check it again, and go in. Recalculate, then go in for it. Guys, practice makes perfection. Nobody expects you to get everything I just explained now. Nobody expects you to get everything I just explained now. The only way you can get it is, if you don't understand what we just did, pick up the recorded session and watch again, or join the next class, or practice. If you have any difficulties, reach out to us. We are always ready to explain to you. We are always ready to show you the way. Guys, if you got value, and for sale, you really don't need to practice for sale. All you need to do is just take the entry price, input it into the formula, do the calculation, and you are good to go. Guys, if you got value from this class we just did, you got value, please put in the value in the chat box. You got value from the class we just did, from the beginning to the end of the session. Guys, give me a powerful value in the chat box. You got value, you understand perfectly. If you were flowing with me back to back, give me value in the chat box. You understand what we just did, give me value in the chat box. You enjoyed the class, you got great value. Guys, this is true value. This is how we all started. This is how we all started. This is why I started. I tell you, it took me 3 months to know how to calculate stop loss and take profit. It took me 3 months to understand what PIP is. It took me 3 months to understand what lot size it is. So it took me a lot of time. But I tell you, with real process, with practice, I wasn't going to leave it alone, because I know how much I could make from this. I wasn't going to relent. I was pained, I lost money, but guys, I was consistent. At the point I was tired, at the point I don't want to move on, but I was still consistent. So you don't want to feel bad. Probably you don't understand anything we just did, anything I just explained. Don't feel bad. All you want to do is when market opens on Monday, pick it up again, practice, reach out, ask questions, and you are good. Somebody said, what is different between phone and laptop during trading? It is different. The OS is different. It's just different. Nothing. I have a brother that likes trading on laptop. He doesn't like phone. So it's just the operating system. Then how do I become perfect? I just said it's consistency. I'm not perfect. I'm just aspiring to be, and nobody can be perfect. I'm always a student, so you are. So guys, you just want to practice, and you definitely become perfect. And consistency. When you're practicing, you practice today. Forex is not something that you practice today and leave and come back next week. You need to practice. I like phone. It depends on which one you like. Like I said, some people don't like phone, some people like system, but I prefer my phone. So guys, I'm super excited to share you my knowledge. I'm super elated. I'm super excited to share you a lot. I'm super elated. Thank you very much for joining up. I'm super happy to be with you again, and I can't wait to be with you again tomorrow so that we can dissect this session again. Once again, my name is Koforola. I call myself the Forex Diva. I love you all, and I can't wait to celebrate you. I can't wait to celebrate you as the 6-figure earner in Forex, 7-figure earner in Forex, $10 million earner in Forex. Thank you very much, guys. I'll bring it up my coach, my mentor, the man that showed me the way, the man with the heart of gold. You've heard from this man, but you really don't know how powerful this man really is. Guys, my engineer turned Forex trader turned farmer. Thank you very much for giving me the opportunity to be here again this afternoon. Thank you very much, Mr. Ayola. God bless you. Are you on, sir?
Wow, amazing, guys. If you've gotten value over the past 2 hours from this amazing, ladies with the heart of goals, let's give them some perfect number 777 in the chat box, guys. If you've gotten value from these ladies, give them a 777 in the chat box. I mean, like, I could remember getting them on board into the Forex industry. Practically, they knew nothing, they knew nothing about the Forex. They are coming from different backgrounds, although I've known them from years, but, coming from a different background where they know nothing about the financial market. And today, I'm so proud of them. They can stand on stages, they can trade themselves, they can make money, they are financially free, anywhere they are in the world, they can make money, they can teach people how to make money on their smartphone. Guys, that is what we call real value. That is what we call impacting. That's what we call giving impact out there to the world, guys. I'm excited. I'm super excited. I believe a lot of you guys have gained value today. You couldn't have gotten anywhere better, guys. You've gotten a lot of value, and this is just for free, guys. I'm quite excited. I'm amazed. I'm blown away. So, guys, this is just day one. All right, this is just day one, and actually the market is closed for the weekend, so we couldn't, go into some trades practically. But for those that would continue with us, those that would join our signal groups and all that, we're going to be having trainings during the week where you can actually get more practical classes on how to enter trades and all that. But I definitely is an amazing day one. All right. And we're going to be continuing this tomorrow. So tomorrow you're going to be seeing a lot of me, all right? Where we're going to be going through a lot of advanced, topics, talking about support and resistance, talking about charts, talking about fundamental analysis, talking about risk management. For me, that is the biggest thing in the Forex market, guys. You require some level of patience to win in this market, and you require to understand risk management. That is why I laugh when I see a lot of people jumping from one strategy to another. Meanwhile, they don't know how to manage their risk, because the Forex market is the only market I know where you can know how much you are losing before you buy yourself. Guys, you can practically calculate how much you're going to lose or win before you go into the market. So if you have that, why would you say you are losing in the market? Because you don't understand risk management, because you are greedy. Right? A lot of people are greedy in the market. They want to make the whole money in a day. I've been in this space for more than 3 years now, and I can tell you, if you are patient enough, if you take it step by step, then you can be a profitable trader. All right. If you are not trying to make $1,000 a day. If you're not trying to make the $100,000 a day, then you can be profitable. Guys, I really appreciate you all. For those that stay to the end of this call, is recorded. Wow, sorry guys, I think I got disconnected. I think I got disconnected. So as I was saying, you can ask them, you can pick any of these amazing ladies, whether Kofo or Fume, to be your mentor. You know, they'll be so glad to do that, all right? Someone said, Mr. Awad, do you think 2 days would be enough for this? No, 2 days is not enough, all right? Like I said, this is an introductory class, enough for you to understand what the market is all about and how to get started. All right. Tomorrow we're going to be exposing to you guys how you can join our team, how you can join our mentorship group, how you can, have access to more trainings and become a success. Like I used to tell people, this is a continuous something. When you're in Forex market, you keep learning every day. I'm still learning. I have coaches, I have educators that I follow back to back. All right. So if you want to become a success in this place, you need to remain consistent. You need to stay in a place of love. You need to stay in a place of learning. All right. You need to stay in a place of gratitude. I see a lot of people, you see this kind of free training and you're still asking some questions, some questions that will be like, wow, if I want to charge $100K for this little training we have, it's worth it, all right? But we are giving out for free. So stay in a place of gratitude, stay in a place of love, stay in a place of learning, and I can assure you, you're going to get to the top in whatever thing you do, not just in the Forex market, all right? So tomorrow, we're going to make the time known, all right? We're going to make the time known. What's the difference between this and cryptocurrency? Yeah, cryptocurrency is a type of money, let me put it that way. It's a digital currency, all right? But although you can also trade cryptocurrencies. Cryptocurrencies is just like you have dollars, you also have Bitcoin, all right? You have Euro, you also have Ethereum, all right? So you can actually trade cryptocurrencies also on the Forex market, all right? Yeah, you can trade that on the Forex market, or you can just mainly do it like an asset, because for me, I see cryptocurrencies like an asset. Because when Bitcoin came out back in 2009, it was less than $1. But today, if you want to buy that same Bitcoin, it's about $11,000. So you can see the progression in price, all right? So you can treat it as an asset. When you see it as a low price, you buy and keep, all right? And later in the future, you can sell, all right? So there's no big difference. The Forex market, like I said, is a market where a lot of things come together to play in it. So you can trade currencies, you can trade commodities, gold, silver, you can trade gold, silver, all those commodities. Then you can also trade indices. Like we have the US 30, the 30 major companies in the US, their index value. Their index value, you can also trade it on the Forex market. So Forex is like a big market where you have all these things together. Then you can also trade cryptocurrency on the Forex market also. All right. So you need to understand. So you can now start understanding cryptocurrency as a whole. You can go ahead and study blockchain, understand what Bitcoin is, understand what Ethereum is. All those things are there. You just need to understand them. The reason why a lot of people get scammed, all right, is because they lack knowledge. So once you lack knowledge, you can easily be scammed. But once you understand all these things, when you see scam, you can identify it easily. All right. So make sure you are always looking for the right knowledge everywhere. All right. So guys, you can definitely connect with us on Instagram. My page on Instagram is at Mastermind.io. So I'm going to type that in at Mastermind.io. All right. You can connect with me on Instagram. You can connect with Kofo at omofayob underscore, guys. Omofayob underscore. You can connect with Fumi at Trade with Fumi. Then all right. So you can connect with us on those lines. Then we can pick it up from there. All right. So someone said, please, can I have Kofo's number? Yeah, that's I'm gonna give you our WhatsApp number. You can send Kofo a message on on WhatsApp. You can also send me a message also 3123745. That is my own number also. I just type in. So guys, you can connect. Feel free to ask me questions on WhatsApp or on Instagram. Make sure you follow me, and we can definitely connect more on a personal level. And let's take this thing to the roof. All right. So stay blessed. We're gonna make sure we post out tomorrow's time. It's gonna be probably in the evening, right? Because a lot of people are going to go to church and mosque and all that. So we're gonna have the class tomorrow by evening, and we'll let you guys know the time on your groups. All right. So let's stay blessed. Let's love you guys and see you guys tomorrow. Bye bye.